Computer on.
Hey, what are you doing?
We won't ever be the same again, darling. Dry your tears, be on your way. You don't understand the light you took from me. Love again another day. You met me in the dark. You filled my walls up with a gallery of stars. But I keep asking myself, is this wanderlust? Who breaks my fall when I am face down in the dust? I think I've made up my mind.
Hey, what's going on, everybody? Happy Tuesday. We're gonna get started in like 2 minutes. I was running late on dinner, so give me a second. Let me just finish cleaning up this real quick, and we'll get started. Alrighty, what's going on, everybody? Here, give me a second here. Let's start this up. All right, there we go. Hey, all right. We're going to do something a little different today. Instead of me jumping right into some charts, I wanted to go through because I know I've personally been talking to a couple people that have been struggling with some stuff. And I think one of the things that I personally did is I personally worked on a lot of my self um, mindset and psychology of trading encouragement. And I just want, if for everyone who hasn't, um, back is doing awesome, man. Yeah, my physical therapy is doing pretty good. Been doing a lot of walking, a lot of stretching, so it's actually it's helped me out. That it's actually forced me not to over trade. Not that I have been, but it's forced me to get off my chair and actually get out and start doing some walking. And next week, I'm actually going to start jumping into the gym and seeing if I can do some other stuff. So, but it's been doing good. It's been doing good, pain free. Now it's all about regaining my strength. So. Um, what I want to get into is, and I know I've shared this with people before, but Mark Douglas has two books, right? It's The Disciplined Trader, which is his first book that everybody that is on this call should read or listen to. You can, if you don't want to read it, like I personally have it on my Kindle, and then I also have it as an audiobook that I listen to. If you haven't, get into that. But I also want you to his second book, which is Trading in the Zone, right? And one of the key things, and I on my walks, I've been doing like these 3 to 4 mile walks. One of the things I've been doing is actually going back and listening to the audiobooks just to help me um, get back to when I first started trading. So what I want people, what I want you guys to do is if you can, right? Um, take out a piece of paper and a pencil because we're going to go through these quick little questions. He's got a like a little exercise that I'm going to have everybody listen to real quick. It's only like 2 to 3 minutes, but and I'm going to do it myself because I actually have I actually have my original sheet that I did. As soon as I find it, hold on. Here it is, right here. My original sheet that I did that I answered my questions to are right here, all right, in my notebook. Okay. And on my walk today, when I was re-listening to Trading in the Zone, I said, you know what? I want to write down and I want to re-answer my questions and just see how I've changed over the last year and a half. And so if you guys haven't done this before, definitely just get a piece of paper out, get a pencil or pen, and I just want you to it's answers like yes or no questions. It's a questionnaire, and I want to go through it because I think it's going to help everybody out, especially if you are struggling with the mindset and psychology of trading. Okay. Um, I don't know how many people have answered me, or asked questions saying, "Hey, Mike, I got into a trade, it hit my stop loss, and then either went up or went down on my take profit. Or I got out of the trade because, I had some kind of fear. And then immediately after I hit close, the market ran away to my take profit. Um, those are things that I think you need to develop on your own. It takes a lot of self-discipline to really become a good, successful trader in the market. So I want everybody to go, like I said, just follow along. I'm going to write this down as well because I want to compare my notes. I haven't actually done this in probably, I want to say I did this maybe last summer. So it's been almost a year. All right. So I'm going to play it and let's go through it and then we'll jump into the charts and kind of do some recap and go over some stuff. Okay. And real quick, just to interrupt. So yeah, just right. I did yes or no. You can do agree, disagree. They're very quick. I'm not going to pause them. I'm just going to let it run through. Just write yes, no, agree, disagree. All right. Um, and like I said, if anyone ever, if you guys want, you know what I'm going to do is I'm just going to copy and paste this. I'll throw this in the chat. This is the link to the book if you've never listened to it. All right. But yeah, let's get into it.
Hey, Mike, we can't hear you. Or we can hear you, but not the video.
Oh, you can't hear the video? All right, hold on. My bad. Did I not? All right, hold on. Let's see. You're not, you can't hear anything, right? You can't hear anything?
I hear you just fine, but I can't hear the video.
All right, hold on. Give me a sec. Why is it not playing? All right, hold on. 9:26. Give me a sec. Were you guys able to hear any music before?
No.
Or when everything? All right. Give me a sec here.
When you, because you always play music when you start, but I didn't hear anything.
No music. Huh? All right, hold on. Give me a second here. Let us share computer sound. Give me a sec here. All right, hold on.
They learn to focus on the information that helps them spot opportunities to make a profit.
There you go.
Can you guys hear it?
I can hear it. Now it just needs to be louder.
Gotcha. Okay.
Thank you.
All right. Give me 1 sec. I'm going to go right back to it. Hold on. Let's see. All right. Can everyone hear so far? Everyone good? Are you guys hearing the audiobook?
No.
You guys weren't at all for the last like 10 seconds?
Yep.
All right, man. What the heck? All right, hold on. Let's see.
No, we can just hear you.
I know, but like 10 seconds ago, you couldn't hear it?
Nope.
All right, hold on. Let me go to share screen. Let's try it again. Share computer. Let's see. Computer sound. All right, give me a sec here. Let's try it out. All right, hold on.
Until recently, most traders were
let me know
men,
if you guys can hear it.
but I recognize that more and more women are
guys got
joining
it?
the ranks.
Yeah, we're good. We're good.
All right.
We're good.
In an effort to
Okay,
avoid
there we go.
confusion and awkward phrasing, I have consistently used the pronoun he throughout.
All right, I'm just going to fast forward to where it starts. Here we go.
This audiobook is designed to give you the insight and understanding you need about yourself and the nature of trading, so that actually doing it becomes as easy, simple, and stress-free as when you're just watching the market and thinking about doing it. In order to determine how well you think like a trader, Take the following attitude survey. There are no right or wrong answers. Your answers are an indication of how consistent your current mental framework is with the way you need to think in order to get the most out of your trading. Mark Douglas. Attitude survey. Mark down agree or disagree for each of the following statements. 1. To make money as a trader, you have to know what the market is going to do next. 2. Sometimes I find myself thinking that there must be a way to trade without having to take a loss. 3. Making money as a trader is primarily a function of analysis. 4. Losses are an unavoidable component of trading. 5. My risk is always defined before I enter a trade. 6. In my mind, there is always a cost associated with finding out what the market may do next. 7. I wouldn't even bother putting on the next trade if I wasn't sure that it was going to be a winner. 8. The more a trader learns about the markets and how they behave, the easier it will be for him to execute his trades. 9. My methodology tells me exactly under what market conditions to either enter or exit a trade. 10. Even when I have a clear signal to reverse my position, I find it extremely difficult to do. 11. I have sustained periods of consistent success, usually followed by some fairly drastic drawdowns in my equity. 12. When I first started trading, I would describe my trading methodology as haphazard, meaning some success in between a lot of pain. 13. I often find myself feeling that the markets are against me personally. 14. As much as I might try to let go, I find it very difficult to put past emotional wounds behind me. 15. I have a money management philosophy that is founded in the principle of always taking some money out of the market when the market makes it available. 16. A trader's job is to identify patterns in the market's behavior that represent an opportunity, and then to determine the risk of finding out if these patterns will play themselves out as they have in the past. 17. Sometimes I just can't help feeling that I am a victim of the market. 18. When I trade, I usually try to stay focused in one time frame. 19. Trading successfully requires a degree of mental flexibility far beyond the scope of most people. 20. There are times when I can definitely feel the flow of the market. However, I often have difficulty acting on these feelings. 21. There are many times when I am in a profitable trade and I know the move is basically over, but I still won't take my profits. 22. No matter how much money I make in a trade, I am rarely ever satisfied and feel that I could have made more. 23. When I put on a trade, I feel I have a positive attitude. I anticipate all of the money I could make from the trade in a positive way. 24. The most important component in a trader's ability to accumulate money over time is having a belief in his own consistency. 25. If you were granted a wish to be able to instantaneously acquire one trading skill, what skill would you choose? 26. I often spend sleepless nights worrying about the market. Agree or disagree? 27. Do you ever feel compelled to make a trade because you are afraid that you might miss out? Yes or no? 28. Although it doesn't happen very often, I really like my trades to be perfect. When I make a perfect call, it feels so good that it makes up for all the times that I don't. Agree or disagree? 29. Do you ever find yourself planning trades you never execute and executing trades you never plan? Yes or no? 30. In a few sentences, explain why most traders either don't make money or aren't able to keep what they make. Set aside your answers as you listen through this audiobook.
Okay, there you go. If you guys need to, just go back and you can go back in the audiobook. My suggestion, though, this is a very long audiobook. It's 8 hours. I've actually, like I said, I've been going on 3-mile walks in the morning and 3-mile walks in the evening. So it honestly, it only took me, let's see, I'm about halfway through. I'm almost at 4 hours, and it's only taken me 3 days. So on my walks, but I would definitely, no, well, yeah, I don't actually use the audio book. I just listen to it on YouTube here. I have the PDF, and I'll tell you what, here, I will put this in the chat. So I don't remember where I got this while Telegram's opening up. I'll do it. But oh, hold on. Let's see. Let's go to Trading View. Come on. There we go. Yeah, Forex Factory. All right. So in Telegram, I'm going to throw this in there in the link here. If you guys want to subscribe to it, you can. Let me just find it here. Okay. It's called Traders Library, right? It's right in here, Traders Library. And this has pretty much every PDF version of any trading book that's ever been in there. And all you got to do is you just come in here, sorry, and you can just scan for it. If you want to look up something on Larry Williams, just type it in, and it's got, 4 books on Larry Williams. Mark Douglas, right? Just type in Mark Douglas, and it's got all the PDF versions. So what I'm going to do is I'm going to copy the link here. I'll put it in the chat. You guys just go ahead, and if you want to add it to your Telegram, you can. But this, and then all I do is once I get the PDF version, like say Trading in the Zone, right? Here's the PDF version of Trading in the Zone. I right click it, and I either save it to my computer or I can email it to my Kindle account. That's my suggestion. All right. But I really want you to think about the answer or the questions that in that survey that they asked, right? A lot of people, and I know I struggled with this in the very beginning, and it's extremely difficult, I understand, to conceptualize the concept. Okay. When I say that trading is 90% mindset, only 10% skill, it's not an exaggeration. All right. It is the truth. Your mind can really screw you up. A perfect example would be, what was it? A couple of weeks ago, we were on a US 30 trade. I called out, I think we were all live on a Zoom call, or I think I was just updating people in the Telegram group of our team. And it was a fantastic entry, minimal drawdown, but it just wasn't moving. And I had other things going on, so I allowed fear to get to me, and I closed the trade, right? I closed the trade for a profit. It wasn't anything much. I think it was like 10 points. But I closed the trade for a profit, and as soon as I hit close, the market dropped 400 points. All right. Now, 400 points, whether you're trading at $1 a point, or you're trading at $10 a point, or you're trading at $50 a point, that's a lot of money. And I allowed fear to get to myself. Many of you are on here that were on that call, or on that, in that chat group that we were talking. You know exactly what I'm talking about. And it honestly, I'm not a perfect trader. I'm not I'm not the world's greatest trader, right? It definitely, it struggles with me, and things I do to compensate for that is I always go back to the basics, right? I always go back. Like I said, I have to start walking now, for part of my physical therapy, right? To help strengthen my lower body muscles. Um, so while I'm on a 3 mile walk that takes me an hour, when I have to go for these hour-long walks, why listen to like some music when I can just be listening to a lot of these mindset, audiobooks that I can help prepare myself for the upcoming days. You know, I came back after my walk this morning, started charting some, getting on the charts and started marking some stuff up, and I felt a very clear degree of focus. I was extremely focused. I was, there was absolutely no fear. Okay. And that's honestly, when you read or when you listen to Mark Douglas's book, that is the biggest problem, is fear, right? Everybody should be able to take a loss, right? Everyone knows, like for me, if it hits my stop loss, no big deal. And I've said it time and time again, the losses don't bother me, right? The ones that get away from me that I couldn't get into are the ones that bother me. So the ones where it misses my entry by a pip or 2 pips or 3 pips and then goes for 1,000 pips, those are the ones that bother me. And understanding that if you miss the first move, and I know I said it before, and I know it's extremely hard for people to understand, especially newer traders. Like when you hear me say, yeah, I don't care taking the 1% loss. I loss on this trade. I'm just going to wait for it to come back up to my next entry. I'll take a loss on that one. If it comes to my third entry, that just means I get a better rate, right? I get a better premium or discounted price so that I can really capitalize in the market. And I'll show you some examples today that happened last week, where I took, my first trade setup was a loss, but then I was able to catch the second move and it was a better ROI on it for less pips. And I know it's hard for traders, when they see a chart in the group and they're like, oh, let me jump into this trade. You take a loss and then you give up on the setup, even though the setup is still valid. For me, it's all about the return on investment, that ROI. I don't care how many pips I catch, right? The only thing, and I know I've said it, I've ingrained it in my body and my soul and my system of trading, that the only thing that matters to me, it's not even the dollar amount, it's the percentage, right? I've got 5 accounts right now that I'm using. Each one is for a specific thing. I have one just for indices and commodities. I have one just for forex pairs. I have one that's like a little vacation fund. I have one that's like a kid extracurricular fund. So I manage them differently. All right. I have different sets of rules, different tolerances and percentages that I am allowed to throw at and then allowed to incur. So, you have to develop your own trading plan, and you have to really, really, really strive to ensure that your mindset is in peak trading condition. That's the only way I can break it down. So I encourage you to definitely, if you haven't read any or listened to any of those two, The Disciplined Trader is the first book I think you should listen or read. And then this Trading in the Zone one is by far probably the most influential one in my trading career. All right. It's definitely developed some very, very good habits in my trading that, that there's really no explanation for, other than, I just listened to what he had to say and I adapted it. Okay. So with that being said, is there any questions real quick off of, any of those questionnaire answers that he was giving out? Does anybody have anything that they're, on the fence about, or anything they need to be cleared up on? Anything?
Hey, Mike, can you hear me?
Yeah, go ahead.
Hey, so for me, the one that kind of got me is the one when he talks, I'm confident when I put in my trade.
Okay.
And I'll say, like, if I'm getting it from the tools or your setups, it's different, right? Like, oh, this guy's know what they're doing. And then I hardly just feel like, okay, let's go. My setup is perfect. Boom.
Right. But you're doubting your own setup? Is that what you're saying?
Right. Right, right,
So,
right.
and there's nothing wrong with that. So let me tell you this. Okay. So my biggest losses and not to, I'll just say it like this. Okay. My biggest losses as a trader came from taking signals from somebody else. Okay. Blindly, blindly. Like, so a perfect example would be like, I used to, when I first started trading, um, I had to learn which, and I don't know if any of you guys have used swipe trades, right? But when I first started, because I have the elite package, I have everything. I used to take some of the swipe trade calls. And there were certain traders that if I saw their name on swipe trades, I wouldn't take the trade. Not that they were bad traders, and it took me a year of trading to understand that I just didn't understand their trading strategy. Okay. Um, and then there would be other traders that I understood their trading strategy and I would take. But, to go with that is, I personally never take a signal from anybody anymore. I don't care. I mean, I'll tell you right now, like Lex Waves, I don't know if you guys jump on Lex Waves this session, but I'm on it every morning. He always gives me props because I always throw my charts out there. He always, he even he comes out on, he tags me on Instagram sometimes. So I don't even know how to use Instagram. I just get the message from him. But, I understand his trading strategy. So a perfect example is he put out a Euro JPY trade today, right? And before he put it out, I already had it marked up on my chart. Um, and I understand what he's looking at. So by comparison, I understand what I'm looking at, and I agree. So if he's confident in that trade setup, and I've already have it marked up, then I'm going to be confident in that trade setup as well. But just him putting out a trade and me not understanding the strategy or what I'm looking for is honestly setting up for failure. Because there's certain things, again, as a younger trader, that I would do is I would get into profit. Say I'd be in drawdown for, I don't know, 5-6 hours on a signal, right? Someone send me a chart and I'd be in drawdown 5-6 hours. The minute that thing got into profit, I would close the trade and be like, "Ooh, I dodged a bullet," you know? And then literally an hour later, it goes for 150 pips and hits take profit. Okay. Um, those are things that you honestly are going to have to work through and develop, right? Now if you say you see one of my charts in the Telegram and you're like, you put it on the chart and you look at it and you say, yeah, man, that looks good. I understand exactly what Mike's looking at, and you take the trade, then that's all the confidence you need, right? That's just giving you, and I'm not saying I don't do that. There's people that send me charts all the time and I'm like, hey, I wasn't even looking at that chart, but you know what? I like it. Let me take it, to me, that's not taking a signal from someone blind. That's honestly doing my own analysis, but just taking their information that they saw something. And that's the whole idea of our group, right? Our entire idea of our group is that I don't have to look at all 900 currency pairs and commodities and indices. We can all share ideas. And if it looks good, I go with it. So hopefully that kind of gives you a little bit of understanding, and don't stress about the confidence part as far as building your own confidence. That's what a demo account's for. And, just keep going at it. And eventually, once you start seeing your journal and you start to see the percentage gain in your demo account and you start ironing out your trading plan, then your confirmations are going to be black and white, right? There is no gray area. And I'll kind of go over, I know someone had mentioned if I can go over some of my confirmations today on when we get to charting, I will. For me, and many of you know this, for me, it is very black and white as far as my trading plan, right? There is no deviation. Confirmations are met. Everything is lined up. I take the trade. I lose the trade. No big deal. I win the trade. No big deal, right? There is no emotion in it. It is to me, it's just a transaction. And at the end of the week, I get to withdraw some of that transaction. That's how I look at it. Does anybody else have anything? All right, cool. If no one else has anything, and listen, if you guys, there's only a couple of us on the call. I think there's only like 16 of us. So if you guys have anything, just jump in, chime in. You don't even have to worry about the chat. Just chime in, ask away. All right. So let's get into it, right? It is Tuesday. Yesterday was, it's a typical Monday. For me, Mondays are extremely slow. I'm not looking at much, right? Um, Good, good. Awesome, Camilla. Yeah, yeah. That's honestly that's what it's designed for, right? It's, when I send out my charts, and that's, especially for newer people that are in our group. When you see me send out a chart in the group, I try to throw an enormous amount of information into that chart, right? Like I'll try to put like notes. All right, I am looking for price to come in to mitigate here, to go here, like I'm just kind of giving you my game plan, right? My playbook of what I anticipate price to do based on my view of the market, right? And when I look at the market, and I know a lot of people, have told me that I'm a very, very technical person when it comes to the market. I do. I mean, I look at everything. I look at not only the technical analysis of what's going on in the chart, but I look at the fundamental analysis, right? I look at what's going on newsworthy, what's going on with COT reports, what's going on with special interest. I look at a lot of, when you see me throw a chart in a Telegram, that's probably 5 minutes of charting, but about an hour's worth of data gathering and information gathering that I've done to devise that game plan, right? So the idea is that you can take my chart, look at it, and devise your own trade idea off of it. There's some people that aren't, they're not comfortable taking a trade with a 7 pip stop loss. Okay. I'm not telling you to take a 7 pip stop loss. I'm particularly going to take a 7 pip stop loss in that trade because if I get stopped out, I have another trade idea that is going to be 15 pips up. That's going to be a 3 pip stop loss. And if that one gets triggered and I get into profit, I'm making 3 times the percentage than I would on the lower trade. Okay. So, and again, that's just knowing the traders, knowing who you're trading with, right? Again, like I follow the trade house guys. Every one of those trade house guys are smart money traders, smart money concepts, which is what I like. For me, I understand it extremely easy, and I can see it. So, when they're talking about trades, just like this morning, we were talking about a US 30 buy. I was already I had that marked up before Zach Hogan even went over it. And I actually had my entry put into my MetaTrader. I had everything going, and it just gave me extra confirmation once someone who's been trading for a couple of years threw that on their chart. All right. So hopefully it helps, and just remember, this is a journey. This is a new skill. This is something that you are going to learn something new every day, because I learn something new every day. I don't know if you guys have watched the Power Hour where John Fibonacci goes over special interest, but I just recently started getting into bar charts, right? And I've kind of started incorporating it, but I got into bar charts, and I'm actually looking for special interest when they get into the market to devise. And I was actually looking at oil right here on WTI, but I was looking at how to identify special interest off of, and not to get all crazy and down the rabbit hole or anything, but just simply coming here and identifying when the institutional money, right? Come on, when the institutional money comes into the market, right? And every time you see this spike up, just like it did here, is institutional money coming into the market. So, it's just something new I'm learning and incorporating into my trading plan. All right. So let's get into the week. All right. We do have a pretty huge, right, a very important release coming out tomorrow. It's FOMC tomorrow. And this right here, I could, this here is, oh, let me change that to, right. This right here means nothing, right? We are everyone from, from Antarctica to the Arctic knows that this is not going to change, right? This is going to stay the same. So this is not going to be a, you know, a market mover whatsoever. Okay. The huge things that we need to do. All right. We need to pay attention to the economic projections that Chairman of the Federal Reserve, Jerome Powell, is going to release. We need to understand the statement. Okay, he's going to read a statement, or release a statement, and the market, the economists are going to digest the words, and it's very key on the words that he chooses to use in that statement, because that's going to develop whether or not we're going to be dovish or hawkish. Okay, my personal belief is just everything I've been reading, okay, is we are going to take a hawkish stand. I think the Federal Reserve is going to start to step back a little bit from all the stimulus, and that's just my personal belief. Everything, we're starting to open America back up, minus everything that's going on in the shenanigans with the riots and looting and all that stuff. But economy wise, we are starting to open back up. So I personally don't see a need for the Federal Reserve to continue to inject. Dovish is just like saying bearish, but hawkish is like bullish. But when you're talking about in an economical standpoint, you have hawkish and dovish, and just think of doves as a bear and hawks as a bull. That's all. And then, of course, the big thing is going to be later in the afternoon after the release, when he actually sits down and speaks to the reporters. All right. If you've never watched one of the press conferences, I definitely encourage you to. Every business news outlet will cover it. The last couple of times he's actually done it on Zoom, which was pretty cool. But just understanding what he is saying is going to be the key to understanding what the U.S. dollar is going to do. But again, I am personally bullish on the U.S. dollar. I do believe that the Federal Reserve is going to start to tone down a lot of the stimulus that they've been injecting, and it's just because, I mean, if you've taken a look at the indices, right, the Nasdaq hit 10,000 for a short period of time today, right, second straight day in a row of all-time highs for the Nasdaq. We are seeing some very clear signs that the economy is coming back. And there's no need for the Federal Reserve to continue to inject that. All right. The other thing, that I personally, and you can come here, you can open up the thing, you can read some of these related stories. I would encourage you, just read them. They're op-ed pieces, right? There's really no, it's not, gospel, all this is just opinionated stuff. But I definitely read all of them, and I formulated basis off of it, because just remember, this is information that the market movers are getting, to influence where they're going to take price at. Okay. That's really the big thing that I'm watching for. Other than that, the calendar is pretty clean, right? So with that being said, you would anticipate that or for my trading plan this week, my game plan is I'm looking at US dollar crosses. I'm looking at Japanese yen crosses. Okay. Those are the two pairs that I'm really going to focus in on this week. And you'll see I've got a lot of charts marked up on them. And it's simply because, in times of uncertainty, right? Obviously, there's a flood to safe havens, right? There's a flood to the Japanese yen. I think we are in a risk-off sentiment. That's why you've seen a lot of the anti-per diems, the Australians, the New Zealands, and the Canadians really, really going bullish. So I do, I do anticipate the yen strengthening temporarily. But I do, and I'm only taking those as pullbacks, because I pairs like, odd USD or odd JPY are bullish. I am looking to sell them down, but only to buy them up. Okay. So the market's pretty clean. FOMC is a huge thing that I'm personally going to be watching tomorrow. Comes in at 2:00. I do have some setups I am looking to take prior to FOMC. And if they do not happen, I'm going to delete them and wait till after FOMC to really look at what I want to do as far as a trade setup. Okay. But we'll get into it. Let's get into TradingView. All right. And like I said, if you guys have questions, don't feel a need to just sit there, just ask away. one of the key things that I took from, let's see. Okay. One of the key things that I really got to learning how the market worked was I asked a lot of questions. And I definitely jumped on those go lives and asked a lot of information. All right, let's take a look at it. Let's get into the DXY real quick. All right. So dollar index, and let's go to a 4-hour. Okay. So dollar index has been doing pretty much exactly what I've anticipated. You know, last week we came into, let me minimize this, right? Last week we came into this area right here. Okay. You could see how we shown a really nice reaction. And the reason we did that, okay. You're in for GU for a sell. I'll go over GU. I'm looking to take it down. You can see this gap created off the 4-hour, and that's exactly where we saw reaction off of. Okay. We did close, right? You can see we did close here on Friday. We gapped down on Sunday. That gap has since been filled. Okay. Now, this is one of those things where, depending on what happens between now and 2 p.m. tomorrow, okay, you can already see the clean equal highs that are resting right there, okay, which tells you that there's a ton of liquidity. All right. Now, I am bullish on the dollar, right? I am bullish. We have a gap up here that still needs to be filled from a Friday close, Sunday open that never got filled, and we have nice equal highs. So I am very, very keen on getting up to at least this area, which should give us some really good areas to either buy or sell some US dollar crosses. Okay. You know, you could see we did close. Bear with me here. We did close on a bearish candle, right, today. But I think that's it. I think, you know, you can see we came right down into that 96.20 level. 96, the whole number of 9,600 was an area I was looking to get into. But I do want to see what happens. I want to see how far we can get up. You know, we are slowly, oh, for the love, we are slowly trickling in to at least mitigate this large imbalance created by this 4-hour candle. Okay. But I am bullish for this week on the dollar, just trying to work in some setups on it. All right. My target are these highs right here. Okay. That's what I want to see. You know, we have these equal highs. We have imbalance created in this area right here. Right. That needs to be mitigated out of. All right. That's what I'm looking at getting into. All right. Also, with the dollar index, I've talked about the Japanese yen. Okay. I've been looking at the yen futures, right? So again, just looking on, here, we'll go to a daily time frame, right? On a daily time frame, you know, what do we have here, right? We have a couple of things. We have support, right? Support. One can argue that, you know, if we go to a 4-hour, it might be easier to see it. But one can argue that it's, you know, some sort of, you know, like a head and shoulders pattern, right? Okay. So this right here, I had anticipated this getting demolished, and it did, right? This is all that happened last week into the start of this week. Okay. This got demolished, and now we are seeing price gather strength and come back up. All right. I am curious to see if we can get into, on the Japanese yen futures, if it can get up into this area here. Okay. That would take out any sell liquidity that was up here. All right. Before ultimately coming back down. And I am ultimately somewhat bearish on the yen futures. I would like to see what happens if it can get down into this area here where you have a triple bottom. Okay. Triple bottom, and you have some really nice clean lows sitting right here. Okay. But that's kind of my basis for going after some Japanese yen pairs and for US dollar pairs. Okay. You know, do I anticipate a pullback? Absolutely. I mean, for 4 straight hours, look at these 4-hour candles, the amount of imbalance that was created here, you know. Um, so that's what I'm looking at, and let's kind of get into it. All right. You know, while we're on watch list, let's look at gold, right? So last week I sent out this gold setup. Okay. Um, what I was looking at, right? You can see we had some equal lows. All right. Lots of liquidity. Price ended up breaking through that sucker, right? And I wanted to see some more downward momentum. I wanted to target back into these areas down here, right? The liquidity sitting down here or down here. The setup that I went with was off of the 15-minute open. Okay. And the only reason I went off the 15, you could have gone off the 30 as well. But this was that last up candle, right? This here was the last move that institutions did to try to take any liquidity out of the market before it dropped. So what I personally was looking for was to take it off of, and I do believe maybe it was a 25 I took it off of. Yeah. So whether you took it off the 15, the 25, or the 30, right? You should have been filled, and the 30 wouldn't have been a candle I used. So I personally took it off this 25, or you could take it off the 15. Okay. Stops are just above this high, right? There's no reason if price goes above this high, it's going bullish, right? It's going bullish. And personally, all I was looking to do was either get back down to the bottom, or you know, there was some imbalance here, like on the 1 hour that I was looking at targeting. I wanted to see if we can get into, you know, whether this was an institutional candle or not. I wanted to get into this area. You can see absolutely no drawdown. And it was a nice 5.5% for me because I only risked 1%, but it was a nice 5.5 to 1 ROI. It went much further, right? It went much further, but I'm not concerned with it. Okay. I don't need, and this is one thing, again, going to mindset, I don't need to take every pip out of the market. I don't. I just need to take my little nest egg. All right. 5.5% on a, what is this? 5.5% in 19 hours is plenty for me, right? I don't need to get into it any longer than that. Now, one of the things I'm looking at doing, right, is looking for another setup. Okay. So now let me delete this. Oh, you know what? I want to leave that. So now what I personally am looking at, right here, and this goes towards my confirmations on gold. Okay. My first question is, where is the money at, right? Where is the money? So for me, the money is resting right up here. All right. Because you have almost equal highs. Okay. So sellers got into the market here, just like I did. Sellers got back into the market here. So there are traders, right, that would say, okay, we have a double top. Okay. We have a double top. So what, you know, what do you think institutions are going to be targeting? They're going to be targeting all of the sellers that are getting in on the double top. Okay. They'll let it go into profit for a little bit, you know, absolutely. You know, my goal is that they'll let it get into profit for 220 pips, and then they're going to take it out. All right. And that's what I'm looking at. So my first question is, where is the money? The money is resting at the equal highs, right? The liquidity levels. All right. Now, the next question is, where are they in drawdown? Okay. Where are they in drawdown? So what is the last down candle that would make sense? Okay. The last down candle is technically here. I'm not looking to take an entry there because we have way too much imbalance here. Okay. For this area in here, okay, we do have some even trading. Okay. Price has come down and mitigated out of positions in here. Price has come down and mitigated out of positions here, right? If we come in and take a look, all right, this 1 hour open, okay, the candle came back into that candle body. That would have been the buy. That would have been a perfect buy opportunity for anybody taking this up. All right. At 2 o'clock in the morning Eastern time, if you were up. So what I'm personally looking for is I'm looking for price to continue back down into this area here. I want to target this 1 hour candle, right? Whether you take it off the open or 50% is entirely up to you. All right. And then I want to take it up. Have an alert set here. Yeah, absolutely. Because I'm not doing a buy limit on it yet. So when price gets in there and I get the alert, I want to come here and take a look. Because for me, this is going to be time. This one of my confirmations I like is all about timing, right? What session are we in? And I do not want this to happen anywhere after New York Open. Okay. I want this to be, I want to be around here, London crossover. I do not want to, I do not want to be there anywhere, I would say maybe like after 10 a.m. If it's 10 a.m. and I'm not in this trade, I'm not taking it. Okay. Just because FOMC, we are going to see manipulation. All right. Now we can very easily just do this. Okay. We can easily do that until about 2 p.m. tomorrow. And then if what I see is accurate, we are going to see this. We are going to see a huge spike down and then a huge spike up. And that is particularly what I will wait for. So for me, it's all about timing. And I'm not going to, I'm not going to put a buy limit on this just because I only want this to happen during London session, London crossover, or at the most right at New York Open, right? New York Equities Open, which is at 9:30 Eastern time. But my targets are just going to be these equal highs. Okay. Again, whether or not you want to take 50% of the candle, right? Your stop loss has to get it down into this wick, right? Now, if it was an FOMC, I would be looking at a smaller time frame. Okay. I'd be coming down and seeing where can, I'll tell you right now, this 30-minute, I like how there's that imbalance, right? That kind of gives me, that tells me that I may be looking at taking it off the 50% instead of the open, right? Because we do have imbalance here that ultimately goes right smack through the 50% of that candle. But just looking to see if there's anything else that I see. So looking at the 6-minute, right? It could technically still come into this candle here, but we do have this long wick. So there's potentially something in there, right? There's something in there. That 5-minute, right? That 5-minute open, if you wanted to take it off of that 5-minute open to get a tighter stop, you could. But again, for me, I'm okay with taking it at a lower, so you can see imbalance price came out to mitigate. You can see how, right, this 3-minute candle was mitigated out of immediately. Okay. Let's see. Same thing with that 2-minute, right? 2-minute candle. You can see how the 2-minute candle, this is the last down candle, price comes in to the body, right? It can go back into it, but it's still, for all intents and purposes, it has technically mitigated out of it. And the reason I have to have my stop loss, right? The reason I have to have my stop loss down to this wick is because we have this imbalance right here. And this technically is the 1-minute candle. Okay. So that is why I need to have my stop loss below this wick. Okay. Because on the 1-minute time frame, there's still some inefficiencies that need to be mitigated out of. Now, I'm personally not looking to take an entry off the 1-minute on this gold setup. Okay. I'm perfectly content taking it off the the larger time frame, just so that I do not miss this setup. Okay. because, if there's any absolute in trading, I can say that absolutely these equal highs will get ran, right? Whether it's with me in a trade or without, these are going to get ran. So for me, particularly, I'm going to be looking at this 50%. Oh, here we go. I'm going to be looking at this 50% right here as my entry, just by that imbalance that I saw. Okay. And you can see for, the way I'm looking at it, this is nearly a 5-to-1. Okay. So for me, I'm okay with grabbing a 5% win on gold, and instead of me missing out on the setup. Now you can very easily say, okay, I'm going to twin trade it. Go ahead. Yeah.
I got a quick question.
Mhm.
I understand that the liquidity at the top is going to get run.
Mhm.
So what I don't understand is why is it going to have to come down first?
It's
Why
not.
would it not? Because it's so close.
It's not. It could very easily. So you'll see me send out charts where I'll say, if these equal highs stay intact, this is what I'm looking for. So if these get run, if this just pops up here and takes out the liquidity, nope, invalid trade idea. So, and I was going to get to that, but yeah. So
Okay.
you know what I'm saying when you see me put in the notes, hey, if these equal highs or equal lows stay intact, this is a valid setup. But the minute the equal highs or the equal lows get taken, and there's because for me, where's the money? If there's no more money up there, there's no point in me taking this setup. Okay, because the liquidity area are my targets. All right, that's what I'm looking to target. Now, the reason I am, gold on the larger time frame is bullish. Everyone should see that. Do I think gold is coming further down before we go up? Absolutely. We have some inefficiencies. We have all kinds of stuff that we can get into, right? But we do have equal highs, up in the area here where there's liquidity up here, right? And then there's liquidity up here. So I'm not going to, I'm not trying to guess which way we're going to go, right? I'm just going to react off of it. So if these equal highs are here and we continue to maintain a bullish structure, of course, I'm going to take it right off of here. Okay. But only if these equal highs stay intact. So the minute, and typically what I like to do is I'll set an alert on certain trades. That's why I'm not setting a buy limit here, because I have my alert here. When my alert goes off, I'll come here and look. If the equal highs are still intact, I'll go ahead and set up my trade, if that makes sense to everybody. Okay. No, not
Okay,
so,
one more question about it.
yeah, go ahead.
One more question. And it doesn't have to go up very far. It's just got to take out those equal highs, correct?
Yeah. Yes, correct. So
Like it can just go right up to like 17, 20.
well, it would need to go.
30.
So here's where it needs to go, right? So when you're looking at it, the top of this wick, right? Because sellers got into the market here, sellers got into the market here. Okay. So at the very minimum, it would need to go above I'll say 1722 to grab the liquidity, right? But what you have to look at is
Right.
what is sitting in here, right? What is sitting in here? So you have to investigate what is in here. Okay. Because there's obviously sellers got into the market here. Okay. So you can ultimately say, right, that we have liquidity here, here, and here, right? So you have to come in here and just see. All right, so let's just go down the time frame and see if we can find. Let's just get down to the lower time frame. All right, so we have a 15-minute, we have a 10, we have a 6, we have. See what this 1 minute looks like. Okay, so on the 1 minute time frame, what do you see? Right, we have liquidity.
Liquidity, equal highs.
Yep. So we know that we need to see price come above 1726.17 to grab all this liquidity. So the answer, like for me, to say, okay, we've taken liquidity out of the market, the price needs to come up to 1726.17 and run this high. And in doing so, we'll grab and capture all of the sell orders that are in here. Okay. So,
Okay, thank you.
yep, if that makes sense. Yeah, yeah. So Jessica, to answer your question, right?
Perfect.
It's not money to be invested. It's money that's already in the market, right? So when I talk about liquidity, that is where are the orders, okay? The big money, right? The smart money, the market movers, the huge, the 10 banks, the companies that are injecting billions of dollars to make up the $1 trillion market. They just can't do like us. They can't put a buy order at this price, right? They have to work in positions, because if say, JP Morgan Chase had a buy order sitting at 1697.07 for $6 billion, the minute that order hit, it would just skyrocket, okay, and disrupt the market, okay? That can't happen, okay? That can't happen. A perfect example, if you ever watch the Trade House guys, what was it? It was XBT Canadian, I think. Hold on. Yeah, here we go. Okay. Here's a perfect example of what happens when a market maker injects too much money at one time into the market, right? Do you see this wick? Okay. This wick went from price trading at 11,000. Think of this as Bitcoin for US dollar, but it's Bitcoin Canadian, right? So on May 30th, Bitcoin was trading around $11,900, $600, right? And in one day, it shot down to $111. What do you think would happen if Bitcoin US dropped to $111? I'll tell you right now, I'd be buying it at $111. Okay. But in order for market makers to do that, okay, has a bearish wick like that to close? No, there's no wick like this. This wick is ridiculous. Okay, look at that wick. That wick people would be, whoever did this, whatever market maker did this, was an oops, because they lost a lot of money. Because what happens is there has to be think of it as scales, right? You have buyers and sellers, and it always has to be even. Okay. So if a market maker is selling the market, they have to have buyers to take the sell position. Okay. Isn't that when the broker crashed? I have no idea. I don't know what broker this is. Or I'm sorry, it's not the broker specifically. This was somebody that that sold the market and took a lot of their equity out of Bitcoin Canadian. Okay. Yeah. This is only for Bitcoin, and this was off the blockchain. So, and it's only specific to the Canadian Bitcoin. All right. But with that right there, so whatever seller, right? Whatever buyers, if you had a buy order sitting at $86 or a buy order sitting at $1,000 on Bitcoin in one day, right? In one day, your $1,000 made 10 times the money, because by the end of the day, it came right back up to $11,000. All right. So this is why smart money has to do things their own way. They have to grab liquidity. They have to run equal highs to take those orders so that they can turn around and sell it down. If that kind of makes sense. Okay. So now let's get into some of the trade ideas I'm looking at. I am looking at oil, or I was looking at oil. Okay. So oil, you can see we've almost completely filled this gap. It's actually extremely small now. All right, come on. There we go. All right, so we've essentially almost completely closed that gap. What I am personally looking for is I want to see if we can now get down. And this isn't something for this week. This is something for next week. But I'm looking in this area right here to take a buy off of. Okay. And I'm specifically targeting these equal lows. I want price to take out these lows. We have a little bit of inefficiency here. This is the last down candle. Okay. And I'm looking to take an entry off of the open of that 1 hour candle, which comes in at around like 33.40. Okay. My stop loss is just below that wick. So I'm only risking 44 pips. Okay. 44 pips. I ideally wanted, when we were here for it to come down, because I wanted to target this gap. Okay. If we do come and close that gap, then for me, I'll look for something else. I'm not going to, this trade idea won't, I won't have a target. Okay. But I do want to see that gap close. And this is particularly a good setup in my, this is a nice, 17-1 ROI. It may take a while to get up there, right? I mean, you figure it's taken 9 days for oil to get to where it's at, at this highest level. My broker doesn't charge swap fees or rollover fees on oil. So I can hold this forever, right? I'm actually still holding a small position from this buy that I took, like 2 weeks ago. All right. I'm still holding a 0.05 position on that, and it's a couple $100 in profit. But that's kind of what I'm looking on oil. I'm looking at targeting these equal lows, and I want to get back into this last down candle, okay? Because this is the last big push, right? You can see on the 4-hour time frame, everything else has kind of been mitigated out, right? You can see everything's been evenly traded on the 4-hour time frame, and I do want to see us get in and close that out, okay? For anybody trading Bitcoin, I do have a Bitcoin setup. I've been dabbling in Bitcoin just because sometimes the market's just not moving. But here's a good example, right? So Bitcoin, what do we have? We have sellers up here, right? All of this liquidity sitting up here, okay? You can see we're just ranging, right? I thought on this move here, we were going to do it. But what did this move accomplish? This move took everybody out that was buying or selling at either support level, or and it created equal highs. What I personally am looking at is targeting in here, right? Because what did this accomplish? This move right here, before it came up, it took out anybody that was either trying to buy it here, and it also took out anybody that was trying to sell like a break and retest of a zone, because this would have been a zone, right? A break, oh, here comes the retest, and it just took you out. We do have major inefficiencies, right? This huge candle that dropped and came right to a perfect 15-minute institutional candle, that was smart money, right? It works on Bitcoin as well. You can see, right? We have a 15-minute down candle, 50% of that. Price came right into it, okay? I mean, we're talking about missing it by what? 5 pips, okay? So what I am personally looking on in Bitcoin, just to screw around with it, like I said, I've been trading my my crypto account lately. I'm looking for price to come into the open of this 15-minute candle, right? I'm sorry, this hour candle. If you want to play it smaller, you can. Obviously there's some stuff in here. I just don't want to miss the move, and of course, stop loss just below it. He said the same thing. Yeah. Okay. Cool. Yeah. So I mean, I tell you what. I mean, I just put a couple $100 in a crypto account, and I'm up something like 60% in the past like 30 days on it, just by doing that. I mean, I'll wait. I know Swipecoin called a trade out in here, but I'm gonna wait because I know it's got to come down in here, right? I know it has to come down here, and then my first target, right? My first target is going to be right here. This is my first target because these are going to get obliterated. Okay, I have an alert right here. So if price does come down, I want to check to make sure that these equal highs are still intact, and then my second target is going to be close out this imbalance here. All right. I'm not going to take it any higher because for me, there's no reason to take it any higher because, well, again, my confirmation checklist says, first question, where is the money, right? There is no money right up here, right? There's no liquidity up here. There's one order. That's all that it is, right? I personally think we may start to see some downward movement after we take these highs. We may start to come down and fill out some of this, okay? I'm personally looking at this area right here as getting filled in right in here. Okay. I want this to get filled in right in here. So that's what I'm looking at Bitcoin. It's off the 1 hour. You can just go right there and look at it, but stops just below the wick. Okay. And if we can get a push down, I'm going to target, these are my first targets right up here. Okay. Euro GBP. So last week I sold Euro GBP. I sent this chart out. I was looking to play off of the H1 Open. And that was the candle that I was looking to play off of right here. We kind of floated around for a little bit. And if anything, this would have caused me for 19 hours, we sat in this area, right? That would have caused me to close the trade. All right. I personally didn't close the trade. I held it. I wanted it to get down to at least in this area right here. It finally did hit take profit. Finally, at, what was it, London yesterday, it finally hit take profit. Okay. I am still looking to take this down. All right. I am still looking to take this down, but nowhere near an entry. I want to see us get back up and take out these equal highs on Euro GBP, right? You can see the nice equal highs right here. I want us to take out those equal highs, and that's why I have an alert set right here. And then I'm going to start looking. I want to start looking in here for an entry. But realistically, we're ways, and Euro GBP doesn't move that much, right? It's not a very fast moving set. I did have equal lows set here, but you can see what happened, right? Price took this out. Okay. Price took this out. So right now it doesn't have those equal lows, but what it does have is these equal lows. So again, confirmation for me is the first question is, where is the money sitting? The money is sitting right down here. Okay. So until my alert goes off, I'm not even looking at this setup. Could I buy it up? I could buy it up, but the trend is down, right? The trend is down. I want to trade this particular pair with the trend. All right. Now, US dollar, Swiss franc, my eyes are still at these equal highs right here. I am bullish on the dollar, so I am anticipating some movement up. Okay. Now, me personally, I wanted to sell this down, right? What I was looking at getting last week, remember, I had a 1 hour, let's see, I was looking to sell off like the 1 hour imbalance, which was in here. The idea was when this did its shenanigans, or when this did its shenanigans, I wanted it to run above the highs, close out the imbalance. I was going to sell it down, and my target was right here, right? That was my target, to take out those lows. You can see, obviously, we did that. We took it out. So my next move, I can tell you, I know that these highs are going to get run, right? Triple top, these are going to get targeted. So now it's just a matter of working in a setup. Okay. We are on a 1 hour time frame. All right. I need a 1 hour break of structure. So for me, price needs to break that. Okay. I need a break of structure. I need price to break that. Okay. And ultimately something like this. I need that. And then find an entry somewhere off of a candle here to take it up. So this is what I'm going to be looking for. And then, of course, where are my targets, right? Where are my targets? My targets are these equal highs. Okay. And then I'll look to see where I want to sell it down from. Okay. I'll look to see where I want to sell it down from. The bullish momentum is only temporary. All right. US dollar Swiss franc is bearish, right? It is bearish. You can see that. All right. The dollar index is bearish. You can see that. The bullish momentum is simply just temporary. All right. I want to see on dollar index, I want to see that gap fill down here. That's what I want to see. Okay. So with that in mind, again, US dollar Swiss franc, I want to see that. I want to see that. Where is it? Here we go. I want to see that come up so I can get a better position to sell down from. Okay. I want to see a better position to sell down from. So you can see on the 4 hour, I mean, until we get that, let me see the 1 hour, I really don't see anything I want to play off of yet. And I don't see anything yet. Yeah. So until we get that break of structure, I'm not looking to buy it yet. Okay. I'm not looking to buy it yet because and again, if for some reason I can't find an entry, I'll just find the next entry, right? I don't need to be in every trade. Okay. I don't need to be in every trade. But in order for me to get into a buy, it needs to break the structure, right? It needs to get a break of structure. Eurocad last week was freaking awesome. I'll tell you that much. I sold this sucker last week right here. I thought I missed it because this happened during New York session. We just sat here, right? And this is an example, right? This is an example. So what is being prior to this happening, right? So if we come right here, okay, what is happening right in this area? Can anyone tell me what is happening as far as the market in orders? What is happening?
Building liquidity.
Yep. On what side? Very good. Both. Yes, absolutely. Right. Yep. We've got orders being built on both sides. Okay. This is a trap, right? This is a trap. We have orders being built on both sides. Okay. So when we look left, right? When we look left, what happened, right? You can see this huge institutional candle. It's actually, let's go to the 1 hour. Hold on. There it is. Okay. Right. You can see this 1 hour candle. Okay. This 1 hour candle came up before the melt, right? This right here is your institutional money buying so that they can turn around and sell, right? Buying so they can turn around and sell. So for the average trader that doesn't understand what this candle represents, it's a tug of war, right? You've got sellers coming in saying, oh, we are at a resistance level. You have buyers coming in, oh, we're building support, we're going to take it up. Okay. I took it off 50% of that candle. That is where my entry was, right? 50% of that candle. And you can ultimately see price did come up, tag that candle. This is the setup I had was this right here. 50% stop loss just above the wick. So it was a larger stop loss, right? Larger stop loss, 43 pips. But where was I targeting, right? What was I targeting? I'll tell you right now, I was trying to get down to these flipping lows right here, man. That's where I was taking it to. Okay. That's what I was looking at. It was going to be a nice 6.5%. Okay. Where I ultimately ended up taking or getting out of the market is as soon as we created these equal lows right here and we pulled up and broke above this area right here is where I closed out of my trade. Okay. I closed out of my trade. So I took, that ended up being a nice little, almost 4%, I think. Yeah. It was almost a 4% trade. Okay. But there was no thought behind it. There was nothing. Now, what did this, by not taking these lows, right? And we now have this here. What do you think about a selling opportunity? Do you think it's a very high probability that we will now come and run these lows before we go higher? What do you guys think? Let me clean up this.
Wouldn't it do the same thing that it was doing before, like collecting money and consolidation before it makes any sort of move? That's what I was thinking.
Well, so it's already consolidated, right? We've already got the consolidation. Okay. Let me zoom in on it. We had the consolidation. We had the mitigation out of the institutional candle, right? That was the mitigation. But what did this candle right here do? Can anyone answer that? What did this move right here, this one candle, what did it accomplish? No, it didn't. Not create an
It
imbalance.
took out
Took out liquidity. Exactly.
took
All
out
of all of the sellers that got here, right? Because think about it. When you see this candle right here, when you see the candle open, whether it went down and then goes up or it goes up and then down, doesn't matter. But the fact that the candle opened here, went all the way up just to come back down means that there was a lot of selling pressure injected here, right? Sellers got into the market all in through here. Then we have another move up. Sellers get right back into it, right? The fact that this engulfed this candle means we had more sellers getting into the market. All right. So absolutely. So we had sell orders here. We had sell orders here. And then when you get this one candle that came up, took out all of the sellers out of this market, right? Took every seller out of this market and then had a very, very convincing sell candle come down. That tells me that that right there is the institutional move to buy up, to sell down. So now that we fail to take, now that we've created equal lows here and we fail to take these triple bottoms, right? These triple bottoms, the only move for me would be, and I was trying to see, this was earlier today. I was going to see if I wanted to enter into this, but I'm personally not looking at getting into it. I personally want to see, right? You could see we have imbalance here. This one bear candle created all that imbalance. So I want to see one of two things, right? I want to see if we can get back either up into the open of that candle or 50%, right? To mitigate out of this buy candle so that they can turn around, take out the liquidity, and hopefully take out the liquidity here, right? That's what I want to see. And then, I don't know why I have this. Let's see. I did it for a reason. Okay. And then my ultimate target, right? My ultimate target would be to get into some of this imbalance that's created here, okay, before we go any further up, right? I want to see if we can get in there. So whether or not this takes, an entire week, for me, it's worth it, right? Because for me, this move is a 12, almost a 12 and a half to 1 ROI, okay? So for me, this move is worth it. So I will wait. I will sit there and wait, you can see the market already has shown a willingness to come up, all right? And the only play for me would be to mitigate out of this 1 hour candle. Now there's a 5-minute open if you want to really crunch it down, but again, I'm okay, especially when I see, right? I don't need a crunch. For me personally, I don't need a crunch my stop loss when I see very, very clear targets, right? These are true equal lows, right? These are true equal lows. So even if I come to just these equal lows, I'm already at almost a 9 to 1 ROI, a very easy 9% without really thinking much of it, okay? Not thinking much of it. That's personally what I'm looking at. I'm going to be looking at playing this. I would like to see this pop up into here, close out this imbalance, and we take it down. That's what I'm looking to do. I have no desire to buy it up. I'm simply looking to sell this down, and we should get it, right? We should get this move up. I'm expecting, oil to be slightly bearish, which will give us that, that push up, and then we can, and again, I'm personally going to be getting into it and selling it down. Okay. GU. All right. Yeah, my bad. Hold on. Let's look at it. What is GU doing? Is it coming back up? So GU, here are my targets, right? On GU. I am looking, target 1 is 2650. Target 2 are the equal lows right here. and then target 3 of these equal lows right here. Okay. Yeah. That's where I'm looking at it with news come. Oh, well, so, I'm with I do like this, man. This played out. I'll tell you, not to take credit, but when we created these equal highs, I was looking for GU to run the highs, come back down, break these lows, right? Just like I was showing you, I need that break of structure. I needed that break of structure, right? So you can see we closed below and then came back up to mitigate out of this position. What I personally anticipate for the news tomorrow, this is don't get married to this trade, right? Because we do have equal highs. Okay, we do have equal highs. So I can tell you right now, you saw my alert that says move stop loss. I'm at break even. Okay, I got into the market up here at 27.40. All right, off of, where did I get in off the candle? I got in off of this last 50% of this candle is where I got in. And I just went off of 40 because it was a nice round number instead of 43. So I got in there. My stop was just above it. But we do have equal highs. Okay. We do have equal highs. So that's the only thing I would be very cognizant of. Now, I can tell you this, where I stand on this is pretty simple, right? Bear with me here a second. I'm at break even. And you know what, this is some good, I guess, good advice for people that are struggling with knowing when to take profits, when to move stop losses, and when to take partials. Okay. There's two things you can do, right? Two things you can do. And we'll talk about GU because this is actually a good setup for it. Okay. So GU, I got in at 27.40. Okay. 27.40. I know with absolute certainty that these equal lows and these equal lows will get taken at some point. Okay. So at one point I was 34 pips in profit. Okay. I did not take any partials. I'm at break even. For this setup, I am at break even. If I get stopped out at break even, I'm okay with it. Okay. Because I know that I will just come back and catch another entry on this. Okay. To target these lows. Now, if we continue to move down, right, what I personally like to do is when we get to take profit 1, okay, if we get to take profit 1, you have two things you can do. You can trail your stop loss, or you can take partials. Okay. So what do I mean by take partials, right? Let's just say hypothetically, right? Let's say hypothetically that, and I'll use a small account, right? Because I know most people are using small accounts. So let's just say we have $1,000 on this trade, right? $1,000 on this trade at this entry. Okay. Now, again, go to break even, you make nothing, right? You make nothing. Let me put the border on it. When you get to take profit 1, all right, pull $250 of profits out. When you get to take profit 2, pull another $250 profits out. And then when you get to take profit 3, right, you pull the remaining $500 out. That's how I personally would trade it. Okay. And I never move my stop loss. Okay. I would never move my stop loss. I would be at break even the entire time. Okay. The other way to do this is you have $1,000 on this trade. Okay. Price moves, say price comes to, and the reason I had my my stop loss here is I wanted it to break below this last down candle, right? Once it broke below that last down candle, I'm fine going to break even. All right. So the other thing you can do now is trail your stop. Okay. So price comes, let's just play it out like this, right? So price does this and now comes down to this imbalance, right? this imbalance. And let's just say 2680, you got in at 26,400. Okay. So realistically, you're at 60 pips in profit. Okay. On pound pairs, I like to have at least 25 pips of leeway. All right. But say you come down to 27, 1.27 is your stop loss, right? Stop loss. That's horrible. Okay. You guys know what I'm drawing. All right. That's your stop loss. Okay. Price now breaks below and we get below here, right? Below this low right here. So now you move your stop loss 25 pips above that. And you just keep trailing your stop loss until it ultimately gets to your final take profit. All right. That's how you can manage it. There's certain reasons or certain times I don't like playing it like that because say you move it to right here and price does this, comes up, tags your stop loss, and then drops. Comes up, tags your stop loss, and then drops. You know, there's certain times, I'll tell you right now. So if I go to bed, if I have a really large position on a pair, okay, and there is news coming up. So like say I'm on a euro pair and there's euro news at 3:00 in the morning and I'm not going to be up. I set a trailing stop. I'll do a 25 pip trailing stop. And if the news wicks me out, it wicks me out. You know, at that point, I don't care. Okay. I made profits. I wasn't up for it. You know, I wasn't going to be managing the trade, but in this instance, I'm managing the trade. Okay. I'm sitting here and give me a second. Let me just take this off. So I have this set up on GU. If it takes me out at break even, it takes me out at break even. You know, I'm not too worried about it because if it does take me out at break even, I know that we are going to get a spike up. Okay. We are going to get a spike up. So what I personally would be looking for is this, right? If this happens and we get a liquidity capture, right? Just wait for it to do this. It's going to engulf, right? You're going to get an engulfing candle and just say, you know, here, I'll draw it out. So you have your FU candle, then you have your engulfing candle, right? Well, just play off that mitigation and then take it down. Okay. That's how I'm going to play this. I know where it's going. You just have to be able to take it. You know what I mean? You have to be able to understand what the market wants to do, the game plan of the market and where it's going to go. You know, now the reason I'm not going to take, you know, like you could say, all right, well, Mike, if you know it's going to run this liquidity and, you know, I'm 15 pips, 10 pips in profit, why just not close out now and then catch it up here? Well, because I don't know if this is going to get taken right now. You know, there's nothing to say that it needs to come up and grab the liquidity right now. All right. For me, it's mitigated out of this FU candle up here. Okay. So there's nothing to say that this won't respect this up candle here, come down to take profit one, and then come up to take the liquidity out. There's nothing to say that. So why not, you know, sit there for me, it's all about risk to reward. Okay. So why wouldn't I just sit there and let the trade play out? You know, there's no fear right now in me. There's nothing. I understand that I may not make any money off of this trade, you know, no big deal. I was only, like I said, I was only 30 pips in profit. You know, in the grand scheme of things, right? In the grand scheme of things, I am looking to capture 158 pips. Okay. I am looking to capture, you know, realistically 10+% on this trade. You know, the 0.5% that I would have made on this is nothing. Okay. So that's how I'm looking at GU. All right. So here real quick, let me get back on track. Did gold, euro odd. What am I looking at? Nothing on euro odd right now. AN. So I typically don't trade AN, but I use it to determine who is stronger, A or the N, right? So is the Aussie stronger or is New Zealand stronger? So by looking at this chart, right? By looking at this chart, and again, you can see, right? Liquidity capture. What's the next area? Liquidity capture. So I'm anticipating this to come down and capture this liquidity. So especially for newer traders, right? So if we're bearish on this, okay. All right, have a good one, man. If I'm bearish on AN, which currency am I more bearish on? Am I more bearish on the Australian or the New Zealand? I'm more bearish on the Australian, right? So if there's a pair between an Australian and New Zealand, I want to take the Australian because I'm anticipating this to go lower. Okay, that's why I'm kind of looking at this Australian Canadian pair right now. It is in a distribution schematic. Okay, so you can see we definitely had a run up, and now we are starting to consolidate in a range. Right, we had equal lows. Right, equal lows. We had a up thrust where it took liquidity out of here. This ended up respecting 50% of this last up candle. Okay. So for me, I'm looking at taking two setups, right? I am looking at taking a setup off 50% of the 30-minute. Yes. So you can see this 30-minute candle, right? Engulfing. This move captured the liquidity out of here. We had a sign of weakness, right? We broke below. This is your sign of weakness, for anybody that's learning Wyckoff. So what I'm looking to do is take 50% of that 30-minute candle, stops just above, and I want to target this inefficiency in here, right? Which is also an H4 open, right? The last down candle of the H4. So that's what I want to target. All right. I want to target that. This is going to be a nice little 8-to-1 ROI. Now, if this comes up and takes me out, I know exactly where I have to go for my next play. If that takes me out, I'm looking in here, right? I'm looking in here. I'm going to take an entry. Just going down, you can look down into the lower time frames, right? There's your FU candle. So I'm looking for that engulfing. Possibly playing off that 5-minute, right in this candle here. If I wanted to really crunch it, or I can just keep it. I can just keep it off of that. What did I do off the 6-minute? Off this 6-minute, I could play it right off of there. You're looking at if you play it off of that, you're looking at a 9-pip stop loss. Okay. So, that goes back to where I was saying, if I take the loss on the lower, if I lose 1%, because I only risk 1%, if I lose the 1% here, right, I don't care, because I'll just set up right here and I'll take the better entry right here. All right. That's exactly how I'm going to play it. This one here, I've got a 23-pip stop loss. I could have a 9-pip stop loss here, so, where, yeah, I lose 1% on that play, but I don't actually know where the entry is, but let's just say what I say, it was like 9 pips, right? Yeah, there you go. So this was 8% I was going to make here, but by losing 1%, I can turn around and make 24.5%. Okay. So again, don't be afraid to take the loss, right? For me, I look as losses as just more information. Right now I'm doing eeny, meeny, miny, mo. Well, is it going to take this one or is it going to take this one? If I take the loss here and give up 1%, oh, no worries. I'm jumping right into this trade here and I'm taking it down. This is giving me everything I need to see for distribution schematic, knowing that we're going to come down. The question is just how far down are we going to go? I can't tell you, but I know that this is going to be my first target. All right. And that's what I'm looking for on odd CAD. This kind of coincides with EuroCAD, right? Odd CAD, I'm actually going to move this over to that. I'm looking EuroCAD to come up, right? Get into this area here. I'm also looking for odd CAD to get up here so I can take it down as well. All right. That's how I'm looking to play it. GJ. So we'll talk about GJ, right? GJ actually, hold on, where is, I did it on my harmonic setup, but I sent this out. Right. I sent this out and there was a harmonic printed on this thing. It did take off. It went up to like take profit one, but for me, it just didn't meet the criteria, right? Didn't meet the criteria for a trade because my personal trading setup, right? So this broke the trend line, right? This was the next candle to close above it. Stop had to be below the low. So it was a 40 pip stop and take profit one was there. So that wasn't even a 1-to-1. And for me to get into a trade, I need a 3-to-1. All right. I don't trade 1-to-1s. All right. I need at minimum a 3-to-1 to get into a trade. So this trend line break and all that just didn't meet my confirmation. All right. For me to get into a trade. But I did send out, right? I did send out that, this exact chart, before all this happened. I said that if price did come down into this area, that I would buy that sucker up. Okay. I would buy it up. And it did, right? It actually did pretty nicely. Let's just see. Where's this silly thing? There it is right here. Yeah. So here's the exact, here's the setup I sent in our group, right? I was looking to take it right in here. This would have met my confirmation. And the reason, right, the reason I was looking at that is the market understands that this prints a harmonic. I'm sure market makers have a scanner that they've developed for harmonics as well. So what would they do? They would allow this to come up slightly and then drop price. And that's exactly what happened, right? Just follow this along. What happens here? We have support, right? Support, support, support. So what are traders doing? They are buying. They're putting buy orders. Oh, we're getting another touch. Let's buy. We're getting another touch. Let's buy, right? And then ultimately what happens? The FU candle comes in. Bam, we have a liquidity grab, right? Price grabs all the liquidity and then goes to the moon with it. So what has to happen now? They need to come back and mitigate out of the position. And that's exactly what they did to the T, right? To the T. My order actually, luckily, my order was 136.23. I actually did 136.25 just to make sure I got into the trade. But you can see exactly what happened. Now, where am I personally taking this trade up to? I want to see this get filled in here, right? I want to see that get filled right there. So that's where I'm taking it, all right? I'm at break even. I'm actually a couple pips in profit. I moved it up to 120, 136.300. And I'm going to let it ride, whether, whatever happens. And then I'm going to wait. I am looking for a sell position when the time comes. All right. But this is a perfect example of, what I was looking at. I used the scanner to come up with an idea. When I saw this on the scanner and I saw this big candle and then I saw this huge liquidity grab, immediately I said, oh no, this is going to be a great setup. I just got to be patient, where the scanner people that trade off the trend line got in here, I just had to wait 15 hours longer. And if you look at it, right? So whoever, if you jumped into this off the scanner, right? You made 1%, right? Or just less than 1%, depending on how much where you got out, right? You made 1%. Okay. I am currently sitting at, we'll call it 3.5%. I'm currently sitting at 3.5% and looking to catch 6.5%, if not more. Ideally, I'd like to get. I'm personally looking at selling at this candle right here. That's where I want to sell from. You have equal highs right up here. If we come up, that would be almost a 9.5 to 1 ROI that I'm looking at. Okay. But this is a good example of, just being patient. I could have, when I sent it out, I was like, all right, this is moving in the right direction because I wanted to sell from this area up here. And I'm still looking to sell from up there. I'm going to buy this sucker up and then just turn around and sell it. Let's see. Yep, perfect. Yeah. Yep, this is what I have. Yeah, so here's my buy, taking it up, and then I'm just waiting. I'm waiting right here. I'm going to be waiting. I'm personally looking at either taking it at the open or 50% of this candle, right? When price gets up to the alert, that's where I'm going to take an eye on it. And if you ask like what determines, Mike, whether or not you take at the open or the close, I personally, so I'm not going to have a limit order set. I'm going to market execute, and I just want to see, how the market pops up in there, right? So if I see, that we're slowly moving into that area, I may just set the buy limit. But if I see that we get a nice big spike, right? So if I get something where, a perfect example, right? So like if we go down to like the 5-minute time frame on this FU candle, right here. So do you see how price right here, we get a nice FU candle, right? Price shows a willingness to move away, right? A willingness to move away. As soon as price breaks above where that candle went, I'm just going to look to play somewhere in there off of that mitigation. So, on the sell side, it would just be the opposite. I may just put the sell limit at the 50%. And if I see that we are showing a willingness to move away from not hitting the 50 and just the open, I'll just market execute around the open. Okay. But that's why I have the alert there. And if it doesn't happen, say this happens during New York, London session while I'm sleeping, at least I have the 50% there. And if it misses my order, I'll try to catch another position on it, right? I'll try to catch another position on it. But that's, Camilla, that's a perfect setup. That's what I'm waiting on. And we have some targets, right? We have some targets to the downside that I want to see attacked. At the least, I want us to get right back down to these lows right here. Okay. GU is running up. Yeah. I got the alert that I was taken out at break even. So, it is what it is. No big deal. Swiss JPY. I actually took this trade. Somebody sent me, and I don't remember the last time I took this trade. But the last time I traded this pair, I took an entry. What was it? The 30-minute? No, the 1 hour maybe. There it is. So someone sent me this setup. It broke structure, right? We got a break below here. And I entered off of this candle right here. I didn't get the full 7%. I only took it to these. This is where I took it to right here. I took it to right there. As soon as we broke that, I got out. I was looking to take it into here, but I just don't trade Swiss franc or Swiss franc yen very often. You could have taken it right to that imbalance. That would have played nicely. That would have been a nice 7-1. I didn't send this out just because it was one of those that I didn't even trade it on my main account. I traded on my play account because I don't really trade this pair very often. And two safe havens to me just don't play nice. They move too slow. But this was a nice little setup on Swiss franc JPY. I could take it off that though. I'm not trading it. So NU, right? I said AN is bearish, right? So I'm looking at a sell on NU or AU, right? I was looking at this area right here is the target of my sell, okay? But I'm not going to trade both. And the reason I'm not going to trade both is because they correlate against each other, right? So if I lose AU, I'm also going to lose NU, meaning I'm going to lose double. So I'm only going to trade one. And I use AN as my bias on which pair is the weakest, right? So I'm going to trade AU, all right? Now, when you look at it, okay, I look for divergence as well. Do we have any divergence in the market? Let me just look at all right. So do we have any divergence in the market? All right. So there's your divergence, right? So I looked at AN to say that I want to trade the New Zealand, or I want to trade the Australian, right? I want to trade the Australian. because AN is bearish. And then you can see New Zealand US dollar has equal highs, but Australian US dollar created a lower low or a lower high here. Okay. So you can see there's divergence in the market on these two correlating pairs. All right. So I'm going to go with my bias. I'm going to go and I'm personally looking at selling AU. We'll get to AU, right? And this is what I'm looking at. Okay. This is what I'm looking at. Right. You can see where my bias was, right? So could it come up into this area here? Absolutely, right? Absolutely. If I lose this trade right here, right, I'm going to look in here. Okay. And then I'll get I'll get a better entry off of it. But obviously, I mean, just look at the 4 hour. I mean, we've been buying for so long. Okay. We've been buying for way too long. We finally got a nice engulfing. We took out, realistically, look at this. We took out 4 days and 8 hours worth of price action in 2 candles. Okay. So all this is doing is one, mitigating the imbalance. But I personally want to see us get up into here. I thought we were going to get it here at this morning. It would have been awesome, but it's okay. You know, I want to see us get into this candle, and I want to sell it down to these equal lows right here. And this will be a nice, 4%, when it happens. Again, I know that we're going to get down here, right? I have the confidence in it. So as soon as we break a little bit of structure on like the 15-minute, I move to break even, and I just let it ride. All right. But this is AU. This is what I'm looking at. If you don't like to trade the Australian, you want to trade the New Zealand, I mean, you're more than welcome to. The setup would be the same, right? The setup would be the same. It's off that candle right there. Let me just clean this up here. Whether you want to take 50% or the 1 hour, it's up to you. Right? Stops need to be just above those highs. Okay. Now, me personally, this is what I saw, right? So when you get in here, you can see that we have clear equal highs, right? And it happened on AU as well. If you notice, my stop loss is just a little higher. My stop loss is above this area right here. Okay. So just move it up a little higher right there. It moves it from about a 15 to a 23. Okay. And then me personally, I would sell it down to this green line. That's where I would sell it to. Okay. This area here. Can it go lower? Absolutely. Absolutely. You could see the equal lows, and you already see what I'm targeting for next week. Right. All right. I'm anticipating a buy from this area, equal lows here, going to run the liquidity, mitigate out of this last down position, and we'll take it back up. Okay. Here, I don't need to put that on there right now. But this would be my first take profit area, and ultimately that would be my final take profit area is right down there. Okay. But that's how I would play NU. All right. UCAD, let's look at UCAD real quick. So UCAD, listen, UCAD, I was looking to buy this thing. I saw that we were going here, but I wanted a break of structure, and we didn't break structure. I actually was, if this would have happened, so I got up at 6 o'clock this morning. This is the 6 o'clock candle, and I just missed an entry, right? So the reason I wanted price to break above here is because of this. Was it a 30-minute? Yes. Okay. So do you see price? This is your FU candle, and engulfing, here's your 30-minute open, right? Do you see how price comes right to the 30-minute open, mitigates out of that position, and then drops? I wanted price to break above this. Had price breaking above that, that would have given me the confirmation that we were going to go bullish. But because this did not happen, even though I had this set up here, and you could see it got a good bounce, right? What did it do? It it went 40 pips. I never took this trade. I deleted this trade. Okay. Because we never did get a break of true structure. I wanted that to get taken out. And then I was actually looking at an entry. I missed it just by a hair in here. You can see all I really did was just mitigate the imbalance, but I wanted to go a little higher, and it never gave it to me. So I never got the chance to sell it. So I personally am just leaving this thing alone. I've been trying to buy it up to try to mitigate some of the imbalance. Everyone that was here just got slammed. Everybody that thought this was support got slammed. So I'm just going to let it play out, right? I'm not going to screw around with this thing, and I understand that it's not a good setup right now. Now AJ, right? AJ, I was looking at some of the Japanese yens, right? AJ, a very clean setup. Here it is right here, right? 1 hour candle. I am looking to take it off 50% of this 1 hour. Stops just above. Where are my targets? The equal lows, right? The equal lows. This is a nice little 6.5 to 1, right? 6.5 to 1. This would play out nicely. And if for some reason, right? If for some reason I lose, right? I lose, no big deal. I know exactly where I'm setting up again. I'm coming right here off this 2 hour, coming right here, and this will be the play. So if I lose my 1% and don't get to capture 6.5, I'm just going to wait, catch my better entry, and catch 9.5%. Okay. So those are the two plays. That's what I'm going to be going off of. All right. I'll send this to you as well. We're almost done. I'm gonna get to the indices here, but I'm very, I'm going with a lot of the Japanese yen pairs, right? You can see same thing for NJ, right? Now, again, I'm more partial to AJ because Australian is the weaker pair. But if you don't like to trade Australian and you like to trade New Zealand, it's pretty much the same setup, okay? But I would caution you to only take one or the other, right? Or if you just want to split your risk, you can. So like if I wanted to, I only trade 1% per setup. I would do 0.5% on here and 0.5% on the other. All right. So EJ, right? This is the one Lex Waves called out this morning. I ended up getting in right here. You can see here's the entry. It was a 7 pip. For me, it was a 7.5. Actually, I went to right here. It was a 12 pip stop loss for me. Okay, I'm sorry. No, my bad. I'll show you where I got in. Okay, so I got into one position off Lex's position. Okay, I then got in. Here we go. Okay, I then got in. Is it the 1 minute? Here we go. 2 minute. Bam. That's what it is. 2 minute candle. We get the engulfing. So we get the sign, the confirmation that sellers got into the market, right? So this candle right here was measured, right? Was measured. 50% came in there. So I actually, as price was coming back up, I'll tell you right now, at 10 o'clock in the morning, 10:15, I was getting ready to throw my computer. And I had to walk away because this happened and then it dropped, right? We came here, I missed it by 1.6 pips, and then immediately it dropped 23 pips. So I went ahead and left my order at 50%. Stop loss was just above the high, which was, 8 pips, we'll call it. And then what happened, right? What happened? Price just failed to break below. I actually closed this out. And the reason I closed this out was because I know now that we are going to get some manipulation, right? So I ended up getting, like 3% or something like that. It was somewhere in here. I closed, I closed out somewhere here before market closed, where like in here before market closed for 3%, um, on a 26 pip stop or a 26 pip take profit. But what do I see now, right? The fact that we have this tells me one thing, okay, that we are going to go higher, right? We are going to probably do something like this. We're going to come in, grab liquidity, and come up. And where do I think we're going to go up to is right in here. All right. We are going to go up here. All right. I have an alert set. All right. That's where I'm personally looking to take the market. I'm not looking to buy it up. I mean, I potentially could, right? We could potentially see something depending on the time of day, something like that. Maybe a stop somewhere in there. But for me, the better play is to wait for it to get up there and sell it down. Okay. Because this is going to be strictly off the euro's strength and weakness, not the Japanese yen. So for me, this isn't a clear setup. NJ, AJR, AU, NU, Euro CAD. Those are my favorite ones. This one here, I really don't want to play with. But this right here tells me that it's just building orders, building orders. We're going to get a drop, grab liquidity either in here or to mitigate this imbalance, and then it's going to go higher. Okay. I did talk about AU and I talked about odd CAD. So those are good. What did GU end up doing? So GU took me out, right? At break even, no big deal. This is actually good though, because like I said, I want to see, delete that. Oh, you know what? Hold on. I'm just going to change this. So change that to around the highs. So once I get the alert, I'll come back here and take a look, but I know where this thing's going to go, right? We know where this thing's going to target. It's very simple. Okay. EU, I'm waiting on EU, right? I want to see, last night I said that we were going to take the lows, we were going to take the highs. This missed my entry by that much to go up. So that was a little, irritating. I can clean this up a little bit here. Hold on. Right. So for me, what's the next play, right? So I actually took an entry here earlier. This was 11 o'clock this morning. I took an entry, I think it was 2 hour. That's what it was. So I took an entry 50% of the 2 hour candle, right? I'm sitting in profit. Stops are above here. I am at break even. Okay. It's 18 pips, right? 18 pips. I did go to break even once, typically what I like to do is if I'm risking 24 pips and price goes 24 pips, I go to break even. So I'm at break even. I do want to see what happens. I do want to target back down here. And then you can also see the equal lows that I want to target. And that goes with the bias that I am bullish on the dollar. Bullish on the dollar means I'm bearish on EU. I'm anticipating this, right? I'm anticipating this. FOMC's tomorrow, right? So I'm anticipating this. We may get a spike up. If we do get a spike up, I'm looking at actually playing off a smaller time frame. There is a all right, so I am looking potentially maybe off this 15-minute, play off that in there. But I'm going to wait and see. I'm going to wait and see. I'm in the EU right now. I'm just going to let it play out. If it breaks me out, it breaks me out. I'm not too worried about it. I am going to re-enter off a better entry if I can. Okay. That's how I'm going to play it. All right, now let's get into the nitty gritty. So this thing, man, this thing is just phenomenal. If you were on bounce back this morning, right? This is the setup that we had. It was, let's just go back to, okay. So this morning, all right. So this is what we saw, right? Right? Clear equal highs, clear liquidity sitting there. You didn't stay long enough. How come? I mean, I only took it to, you got scared. I'm telling you that fear. So clear equal lows, we had clear equal highs, right? So there was two plays. The two plays were to get a spike up. If it spiked up, I was going to sell it down like this, right? If it spiked up, I was going to do that. Or if it spiked down, I was going to buy it up. That's how simple it is. So, people will ask me, "Hey, Mike, what are you going to buy or sell US 30 today?" And, honestly, my answer is I'm only going to trade it during London or New York. And I'm going to wait for a clear sign, So we still got 100. Yep. It moves so fast. Yeah. I mean, it did, but it did exactly what I wanted it to do. I wanted it to come down, spike into this candle right here. Okay. Now my stops, I did go and I put my stops 50% of this candle. Okay. Right. 50% of this candle. Because technically, even though these have traded into this candle, it still can go to 50%. Okay. So, I mean, you could see 166 was the 50%. I went a couple of points below it. So I was risking 48 points. My first target was these equal highs. And then I wanted to take it to this candle right here. Right. I wanted to take it to that candle right there. So it was a nice, 3.5% is the first entry that I took, so right at market open, bam, we get it, right? We get it right at market open. We get it. And then we get the immediate confirmation of signs of strength, right? And that's exactly what I was looking for, right? That's exactly what I was looking for. And then I hit take profit one, it was that simple. So now knowing that I see that, right? It is very obvious that there is something in this candle that we need to investigate to get a better entry, right? To get a better entry. So I don't remember if it was in the 1 or the 2 minute time frame. Oh, you know what it was? It was yep, no problem. Have a good one. Enjoy. There it was on somebody, I don't know if it was Jordan, but he had the 15-second time frame. I know, Mike, you've got the 15-second, but you'll see in here there's a 15-second entry right in here that we were able to get into, and I was able to capitalize as the market comes right back down. Where was it? I think it was right in here. So when the market did this, maybe it was the 2 minute.
I think it was the 1 minute, Mike.
1 minute
On a previous down candle. If you go back a little more.
Oh, in here, that's what it was. Yeah. Okay. So perfect. Yeah. Was it the open or the 50%?
I think it was the open.
All right, hold on. I'm just going to put both. That's the open, and this is 50%. Oh, it was the open. Yep. All right. Yeah. So this was the second play that I caught, and all I did, again, right, equal high, equal high, equal high. I really just took it to the equal highs. That's where I took it. I took it to this line right here. and it was like right around like 3:30 or something like that when I got the alert. Yeah, right. What was it? Oh, 10:45. That's when it was. Um, and that's exactly where that second entry came in. So I took the first entry right at open, which was honestly 2 5-minute candles, and then this one here. I mean, I was on my walk when I got the alert that it hit 170 points. So I caught 3.5%, and I caught 6.5. So I think for the entire day, it was just over 10% that I caught, and it was done in an hour. Right. That's pretty much that was how quick US 30 was. I didn't trade anything else on the indices. You had a buy limit at 27,194. Okay. What right now? You have it like currently? Oh, okay. 27. Oh, you know what? Yeah. I had a buy limit. It just never came back down. I have it right down here. So this is where I was looking. Here, let me delete this so it makes a little clearer sense. Yeah, I'm looking to play off of this 5-minute candle right here. I don't know if that's the same thing you've got. I mean, it looks like in the same range. I don't know if it's Mike Nav, so it might be off like the 1 minute, but I'm just looking to play off that, and my stop's just going to be below the wick. And you can see, right, equal lows, we have this major imbalance here, and 595 is the next one, right? Oh, up in here, off of this candle in here somewhere. So let's see.
Yes.
All right, let's see what we can find up there. Right, so this makes sense, right? Because you have almost like a resistance area, right? You can call this a resistance zone. Price wicks up, so where they need to mitigate out of is in here, right? Where they need to mitigate out of is in there. Well, that looks pretty good right there. 3-minute.
Mhm.
So,
He had it at 595,
okay.
or
Oh,
he had a zone
a zone.
from
I got
the
you.
bottom of the candle or the bottom wick of the candle up to 50%, I believe.
Gotcha. Let's just see what the 2-minute shows. 1 minute. Yeah, I mean, the 2-minute and the 1 minute, or the 3-minute and the one, it doesn't really matter for me. I mean, you're only talking 22 points for a stop loss off the 50%, or 41 points, you know. Yeah, I mean, those are the only two plays, I mean, it's got to mitigate out of those positions, right? I was eyeing these equal highs to see if they were going to target something with it. Those are gone. So yeah, absolutely. I mean, this area up here or the buy. I mean, actually, so I have my alert here. I'll set an alert up here as well. Yeah, I mean, they're very easy setups. You're either going to win or lose, right? It's either going to come here and move away, or it's going to hit here and take you out. So me, I only risk 1%. So all right, I'll lose 1%. I'll set this sell limit up here. I'll set this sell limit up here because I don't mind risking 1% at night, and I don't even have to watch it. If I wake up in profit, I wake up in profit.
That's what I thought about doing.
Yeah,
as well.
SPX is still the pretty much same thing. If you notice, like I had these downward candles, so you could see like NAS. I think I did on NAS as well. Yeah, so NAS was there was divergence, right? We had NAS going down. It sold off. SPX sold off. Oh, here we go. XPS sold off, right? But what did SPX do? I mean, just looking at this right here on the 1 minute, we've got clear equal highs right here, So I anticipate those getting obliterated, without a doubt. Those are getting run, before the market goes and cleans out any of this stuff down here. It needs to run these highs, It needs to run these highs. So for me, I'm not touching NAS. I mean, NAS is up above 10,000. Look at that. I'm not touching NAS. US 30, I think, is the cleaner play for me. By far the cleaner play. I would have liked to have jumped in off that 5-minute. I might even go off of the 15. The 15-minute looks clean too, right here. Just have a little bigger stop loss if we can get a drop down. I talked about gold, talked about oil, talked about the indices. I'm not looking to trade any. Honestly, there's nothing in here for me to trade other than dropping below these lows. So if we kind of just scoot around here in that New York Open tomorrow, we're down here. Definitely, this is the play. Run these equal lows. Or if we create some sort of equal highs to jump up and scoot down, that's how I'll play. But right now, I mean, look at that. We're up 192 points post market. There's, I know, I know Armando was looking at some sells on this. I do agree. I mean, we do need to come back and mitigate out of this stuff here, but until the market shows me a willingness to sell off, I mean, I'm really not interested. I mean, you can see these equal lows down here. These are going to be targets eventually. Absolutely. These are going to be targets. But what's the 4 hour? Let's see what the 4 hour looks like. Yeah. I mean, we're almost, no, we've closed the imbalance on the 4 hour, and the 1 hour, we're almost close to it. So, this doesn't show me or give me any confidence that we need to be doing some big time sells, So I haven't been swing trading any of the indices. I've only been intraday trading. I'm catching the quick 3, 4, 5%. And then I'm done. I'm not looking to really, screw around with it. And it did. I mean, look at this. You have a perfect, right? You have some liquidity being built in here, triple top, triple top, triple top. Market comes up, FUs everybody, boom, bounces down. And then now they're coming out to mitigate out of their position. So this may be the area that we get the sell-off from, And if it happens because of FOMC, remember a hawkish tone, if the Fed is pulling back, we're going to see some indice drop-off, okay? Especially if the yen futures appreciate. Strong yen futures indicate a weak indices. All right, that's the correlation. So, but pretty much that's all I have. I'm not. I've got a couple good setups. I mean, if you do the math, just on the setups I'm looking at, like on EU, that's 4.5%. ACAD, I'm looking at 8%. AU's another 4%. AJ would be like another 6.5. I mean, that's my week. I'm done. Yep, absolutely. Yeah. I'm gonna send them out in the Telegram. I'll send them out in the Telegram. I'm not. What's that? 4 or 5 setups, and that'll be close to 20% on my Forex account. Okay. Is there any questions? Anybody got anything else? Anything they want to look at? If there's anything I can stress, just patience. Just be patient. Don't. Lex Wave says it all the time. Don't force your will on the market. S&P has a huge spread right now. Let me check. Let's see. So I don't know. What's your spread on S&P right now, Bonnie?
Right now it's at 6, but earlier today it was like every time I turned around it was 9, 10, 12.
12 points?
Well, it just says spread 12.
Oh, yeah. So 12 means 1.2 points.
Well, when it's going the negative direction, it looks like a lot when you enter, and you automatically have like a large amount to fill back up versus
Yeah, because like so on FX Choice for me right now, FX Choice is 0.7 points, right? So it's not even a full point, the spread,
Yeah.
you know?
Okay.
Yeah, where US 30 is 2.3 points. So, but I get more point for dollar, a dollar for point on US 30 than on S&P. Um, you know, but yeah,
Now,
US,
S&P, I can trade like a lower lot size
right.
and less than $1 a point, where US 30, that's the lowest I can go, dollar a pop.
What broker are you using?
Point X.
You should, I mean, it's up to you if you want to try it, but you should look into FX Choice.
And the pro version, correct?
I mean, you can do the standard version if you want. I like the pro version because it's lower spreads. If you're trading Forex, you have to pay commission, but on indices, they don't charge you commission. So like on my FX Choice, I don't get charged any commission on US 30, S&P, or NASDAQ trades.
Okay.
And you can trade 10 cents per point on US 30. So
Okay.
I've recommended to a couple people. I went to FX Choice because a lot of the trade house guys use them and they've been using them for years, and they're a regulated broker, and they don't require you to make withdrawals in Bitcoin. So that helps me a lot because I lose a lot of money when I was when I'm withdrawing a couple thousand at a time a week. I lose quite a bit of money in Bitcoin transaction fees and in the price differential of Bitcoin. So I like the fact that you can use other methods to transfer money from FX Choice to my checking account.
Okay.
But all right, Mike. Yeah, have a good one, dude. Yeah. So and like I
And
said, I mean, what's
you're
that?
using TradingView for your, or Forex.com for your.
For my Forex account. Yeah, I am. I decided, I wanted a more a more regulated broker. So Forex.com is what I went with. It's a U.S. broker. You have to abide by the U.S. regulations, but honestly, I don't. When I'm trading Forex, I'm not hedging, right? I mean, you could see the setups. I'm either in a buy or in a sell. I'm not doing both. And the whole first in, first out, you don't have to use on Forex, where on a Wanda you do. So on Forex, if I have two positions, I can close them out whichever way I want. I don't need to close. So like on a Wanda, like most US brokers, they have the first in, first out. Perfect example, like TD Ameritrade, like Armando it averages his price and he has to close them out in the order he opened them, where I don't have to. So that's why I did Forex.com. There's some, negative stuff with Forex.com. So like a lot of the exotics, so like GBP NZD or NZD CAD, I can't trade because it's like an 8 pip spread. But I really don't trade them anyway. All US dollar pairs are like 1 pip. Sometimes they're less than a pip. Euro USD is like 0.4 of a pip. A lot of the majors and a lot of the like AJ's 1 pip, NJ's 1 pip. All the yen and the US dollar pairs are low pips, and that's what I like to trade. So that's why I went with them, and I like them because I can use them right on TradingView.
Okay.
So
So can you set a buy limit and a sell limit on your indices at the same time?
on FX Choice, yeah, and you can be in a sell and a buy at the same time. If you wanted to, you can hedge. I used to do that when I swing traded. Like if I caught a buy at a really low position, I would just keep the buy open, forever for a couple of weeks if I had to, just because I knew we were going to be bullish in that current trend, and then I would sell the retracements. And you can do that on FX Choice. I personally, I've gotten away from swing trading the indices, just because I'm able to catch 3, 4, 5, 6, 10%, intraday trading on 1 or 2 moves, and I'm done.
Okay.
So that's how I've kind of just, and the big reason also why I split my accounts, right, is it's just easier to manage, you know? So like my Forex account, right? I just set and forget it. You know, I set the alerts. When the alert says move my stop loss, I just log into Forex, or right on TradingView, I just move my stop loss. And that way I can sit there on my phone and only have 1 or 2 trades that I'm managing on MT4 for the indices. You know, honestly, it got to the point where I might have like, you know, so my trading plan says I can have 3 at-risk trades open, right? Or risk 6%. So if I had 7, 8 trades and they're all in profit and they're all at break even, that means I can take on more trades. So there'd be some times where I would have 12, 13 trades open on my MetaTrader, and it would just be a pain in the butt trying, okay, I hold this one down, open this, you know what I mean? Like trying to manage them. So when I split my accounts, it's so much easier, you know, and then I don't have to worry about, you know, so, and it hasn't happened in a long time, but if I say on my Forex account, if I hit 6% loss, I'm done. I'm done for the day. I come back tomorrow, but at least I can trade on my indice account, you know, and still make some money. You know, so I kind of did it like that so I can split it up, and it's not, you know, some people ask, well, is it hard to manage all those accounts? And honestly, it isn't, you know, because I have specific goals and a specific trading plan for each account, you know. So like my Forex account, you know, just like you saw me go through the Forex stuff, you know, I find the best ones, set my alerts, set my orders if I'm going to do an order, and then play off of it. And then just manage the trade as I get the alerts. You know, I don't like to sit there and watch, you know, what's going on. If I have an alert set because it breaks structure, I close the trade. You know, it's that simple. And then on the indice account, I just sit there on my phone, play it around, you know, take my 1, 2 trades a day, and I'm done.
Okay.
So anybody got anything else?
Thank you.
Absolutely, absolutely. If not, I'm going to call it a night. So, all right, sounds good, folks. I'm going to call it. Have a good one. I will be I'll be in the charts tomorrow morning as well. So I'm going to see if I can get up a little early, maybe catch that London crossover. So, all right, guys, have a good one. Enjoy. I'll see you guys later.